Today, we're going to start the session with a conversation with Lisa Chai, General Partner of Interwoven Ventures. Lisa, welcome to the show.
Thanks for having me.
So this is my first conversation with Lisa, so I would love to get to know you a little bit. If you could introduce yourself, a bit of your background, and then a bit of the firm's background for the benefit of our audience, that'll be great.
Yes, definitely. So I'm Lisa Chai, a co-founder and general partner. I co-lead the firm's investment activities. I have over 2 decades of investing experience in both public and private markets, where I was a senior vice president and portfolio manager for several companies, including Global, Angelo Gordon private equity firm, and Palisade Capital's emerging growth funds, responsible for industrial and technology sectors. Interwoven, the company I co-founded, is an early stage venture fund investing in the field of robotics and AI, with an emphasis in foundational industries going through major labor shortages. We invest in seed to Series B companies across multiple sectors, such as manufacturing, logistics, supply chain, and healthcare tech, where we believe that robotics and AI are sort of making the biggest impact today and will experience that sustained period of growth that we're looking for. I started my tech investing journey even when I was a kid, watching science fiction movies, and in college, I became a computer programmer. I've always been a very big finance geek. I read a lot of books on Excel spreadsheet, I got a lucky break working on Wall Street, working for a hedge fund, covering technology sector and consumer, before moving on to PE and VC. But I've always been sort of fascinated by technology, watching movies like Star Wars, and really been reading on the side all these disruptive technologies, whether it's blockchain, climate tech technologies, or AI. And I've really been involved in learning about AI for probably about 20 years now.
How big is the fund, Interwoven?
Yes, we are a small fund of just 4 investment people. AUM right now below 100 million. We began the VC journey when it was really incubated under a larger established investment fund called Global. And that was a $5 billion plus fund. That is an investment strategy that was sort of founded in 2013, where we were the world's first to launch a robotics strategy. And at the time, nobody was doing that. But it was all companies comprised of publicly traded companies. So as a team, we have been researching investing in the space, and one of the close partners said, hey, why aren't we investing in the private space? So we were incubated under them. We raised money through sort of the close circle that followed Global and also the Global entity. And we launched the first fund in December 2021.
Okay. And what size checks do you write when you write seed checks? Well, let's start with seed because, we are a very early stage accelerator. Let's start with seed. What size checks do you write?
On the low end, about 100,000.
Okay.
So for pre-seed to seed, we're pretty much of a seed investor rather than a first check investor, but right somewhere between 100,000 to, let's say, 500,000 for seed round. But we do invest multiple times. We have several companies where they raised a seed round and they did an extension of a seed round. We participated. Yeah. So we're very flexible in that sense. We do invest through convertible, safe, many different ways where we work with the founders on that. Series A and B, we have written checks up to 3 million.
Okay. And what do you want to see in a company before? What is the stage of development of the company that you want to see before you're willing to write a check?
Yeah, we want to see some type of product that you've already developed, a demo. If you have a couple of pilot customers, that's great, wonderful. We'll probably have to talk to one of them, or at least get some use case, understand. If you don't have revenues, that's okay, as long as you have some of these pilot customers, and many of these customers' use cases aren't new to us. We understand it. So we know we could scale. And where we choose our founders that we choose to work with, we look at our backgrounds and we say, where do we have the domain expertise? Do we have connections with customers? Can we help? The more we have this alignment, we tend to lead around or co-lead, and we write bigger checks. Where we really understood that the collaboration, working with the investment team and as well as our technical advisors, and as well as the founders and their technical team, that has really worked out well for us.
And what is your geographical footprint in terms of the kinds of companies that you want to invest in? You are based in New York.
Yes, we're based in New York. We do have some of our key venture partners and advisors throughout the world. Right now, I would say we invest primarily in the US, around 70%. The rest are in the UK and Europe.
Okay, but not New York only, all over the US.
Yes, all over. We actually tend to prefer, and I don't know how you think about this, but we tend to prefer maybe get out of California, because I think there's so many great companies outside of California. But what we have found is we will build a relationship with a founder in various parts of the US or the world, and then they eventually move to California. So now I look at our portfolio company analysis and say, wow, why are these companies all in California? Half of them moved. And I understand it. I think it's something that we support. If they tell us and say, hey, we have to move there because our customers there or our biggest investors are there, we want to be part of that ecosystem and to get the support and help from other founders. And I understand, really depending on what you're building.
Yeah, but you don't have it. But I think the bottom line for our purpose, since we're a global accelerator, for our purpose, pretty much all I want to know is that you invest all over the United States. You also invest in Europe. You also invest in the UK. And that would give me the framework with which to work with you.
Exactly. And then right now, if you look at our pipeline, it's mostly global. And we have companies in Asia. We're really not excluding certain countries. We just look at our expertise and the flow of companies that's coming through where we really have a connection. So we are very open. We do believe that what our investment theme that we're looking for is really primarily towards global type of expansion. And some countries is more attractive because sometimes robotics and AI are relatively new in those countries. So we really want to be picking the pioneers of those companies.
So from what I gathered, you are focusing on vertical AI. Is that a correct observation?
I think that we lean sort of heavier towards vertical AI, but it's not a mandate.
Okay, let's double click down on vertical AI. We'll come back to what else you're doing besides vertical AI, since vertical AI is coming up in conversations constantly right now. And we're double clicking down heavily on vertical AI. Earlier this week, I talked to a really excellent founder who has built up to over 5 million in revenue in healthcare AI space and doing really well. So I want to understand how are you thinking about vertical AI, and what kind of things are you particularly interested in, feel like you're either looking for or have invested in? And you're welcome to talk about some of your case studies of what you have invested in. And if you do that, I would like to understand why you chose to invest in those particular companies. What stage did you discover them, and what attracted you?
Right. We're looking for where robotics, automation, AI play a very big role. And what industries are going through that massive demographic shift, labor crisis. We have also seen the rise of e-commerce and how that's straining the supply chain critically today. So then we look at our background and our investment team and where we have that domain expertise and deep network where we could help out. And they tend to be areas in that manufacturing, logistics, supply chain, and healthcare. We do believe overall the AI and robotics and automation really comprise of all industries, and we see the impact in it. In related to vertical AI, what we see is that where are the use cases that we could see that's providing an immediate ROI. And that's when we really looked at some of these specialized industries. We need to make sure that there's some type of defensibility in what you're building. We know that vertical AI is going to be stickier and there's going to be a higher switching cost. In the supply chain industry, companies like UPS and FedEx and DHL, they are the large gorillas, and they're looking at solutions that they don't have to switch out every 6 months. So in situations like that, we know that if a company like UPS is really evaluating your system, that you have something that they could see that could scale within their organization, and you'll have a really successful installation experience. So this is sort of how we're looking at it. We also understand that robotics and AI are relatively new, still emerging and still evolving. So we look for that traditional industries where they're going to invest heavily. They're not going to split it out, and they're looking for some expertise and support, whether it's coming through integrators or advisors or investors like us. So we really work very closely together with the customers.
So let's do some use cases. Tell us about some companies that you've invested in vertical AI, and let's understand a bit more about those.
Yeah, definitely. But I think it's important to know, like, we don't say, okay, we need manufacturing companies, so let's look at manufacturing. We meet founders from all over the world all the time. Yes. And we hear the use case and we're like, wow, there's a light switch that goes off, you know?
Well, it's important. So more than your domain knowledge, it's more important for the founder's domain knowledge in that vertical AI, whichever domain that you're looking at, to be there. That founder's domain is the defensible advantage. Domain knowledge.
And so most recently, we invested in a company called Chef Robotics. Mm-hmm. I don't know if you ever heard of them. They're in California, in San Francisco. The company's in a really rapidly growth stages, helping food manufacturers in the prepared meal industry. The robots know how to handle over 2,000 ingredients using their AI-powered software. And so far has done just a great job of preparing over 50 million meals since inception.
That's cool. That's really cool.
Yeah, this is more than any food robotic companies that out there that we know of. But the secret sauce is not their robot. They just buy an off-the-shelf robot. Their secret sauce is their software and also their real-world production training data that they already have. And because of that, they are now leader in the food space. Chef has customers in the US and Canada. They have plans to expand worldwide, with UK market being sort of the first ones out of North America that they're going to roll out this year. And what is really important is that these robots in the food space have traditionally been sort of designed to automate the workflow of that lower mixed production lines for that mass production of one item. But the trend now,
what stage did they come to you? You know, what was their proof point, and what stage did you get involved?
This is a very interesting story because this is a seed stage company that had some traction. The founder already had 3 customers, but at the time, maybe they had produced about a couple 100,000 meals using their robotic system. Maybe they had 1 paying commercial customer and the others were pilot customers.
Pilot customers, yeah, that works.
But what attracted to us was really their business model. Their business model using a RaaS model, where they're actually kind of leasing out their robotic solution on a monthly sort of subscription model, was something that the food industry desperately needed. And their ROI was immediate, where 6 to 9 month type of ROI, where food companies are looking at labor shortage as a comparison as to the turnover in the labor, retaining the staff. That was the biggest sort of headache that the industry was going through. So when you are coming with a business model of a RaaS solution, it really clicked. And it's important to know that RAS doesn't work with every vertical, but in the food space, it really worked. Mm-hmm. And we also saw that this is a great example of a company that's a physical AI company where AI is really interacting with that physical environment. Yeah. So they had a small traction, came to us. We had a lot of due diligence, looking at the companies, looking at getting a demo, went to their headquarters and spoke to a customer, spoke to some of their lead investors and their board members, and it just all came together. Mm. And since then, we've been a very happy investor. They just raised the Series A round very successfully, oversubscribed, and we also participated. And our style is to continue to participate probably up until Series C or D, even though we are early stage investor. Yeah. We are going to continue to support as much as we can, as long as they're meeting the milestones. And so far, Chef has really exceeded all of the milestones, including ours, and I think even theirs.
Mm-hmm. So we have this Entrepreneur Journeys series where we love to invite entrepreneurs to come tell their stories, just like you're telling your story in this session, but we have also Entrepreneur Journeys. So if these guys have crossed the $5 million revenue benchmark, please send them over to tell their story if they want to share.
Okay, yes, I would love to do that. I would love to, help that ecosystem of founders helping each other. I think that we have founders that are very open about being transparent and even sharing the deck that helped them raise. And then we also have founders that are, a little bit on the quieter side and they just want to do a one-on-one calls, but love to make that.
Well, no, I think it's, the Entrepreneur Journey series is a great story from a PR point of view. We've done thousands of these stories and the who's who of the tech entrepreneurship world have been in the series. So it's a wonderful PR exposure actually for them. So yeah. Anyway, let's get back to what else you have found interesting. This was a really cool use case. What else have you invested in?
Well, yes, on the flip side, another company that we have investment in is it's another US-based company, but they have an AI-powered diagnostic platform for cancer detection and drug discovery. Mm-hmm. A traditional AI company, but bridging that gap between physical and digital AI. So the company's name is called Prosha, and they're based in Philadelphia. We invested about 4 years ago, and they have a platform called Concentric, which is an AI-powered, and it's really built to accelerate the drug development, diagnostic for pathologists and scientists. Currently being used by 16 of the top 20 pharma leaders, and many of the diagnostic labs are also using it. And I think this is where the AI really shines in healthcare, is helping that physician for that quicker and more accurate diagnosis, but also reducing that physician burnout. So I really believe that we need to help the pathologists and physicians from the burnout and accelerate that time that patients receive their biopsy results. I had a biopsy result last year. It took 8 days for me to receive that. And I thought it was kind of ridiculous. I'm like, why, with all this technology that we have, why do I have to wait 8 days, right? So these are AI engineers and sort of biology scientists that came together from Johns Hopkins. They spun out and they left the company to start this. And so proud of what the team has accomplished. It's a young team. They've hired some experienced operators to help build. They have, it wasn't always a very smooth pathway for them because, healthcare industry is super slow.
Very slow, yeah.
And they don't like new technologies coming into their industry, but they really stuck through it. They have grit. And now recently they had a very successful fundraising round led by Insight Partners. And I'm so proud to be sort of part of the early investors of this company.
And you said they're selling to pharma?
Yeah, they're selling to the pharmas for the research scientists for drug discovery. And then the other part of their business is they sell right to the labs, pathology labs, where you could use their software platform that's actually digitizing the entire workflow from the time that you send the biopsy, they upload the data using AI to detect whether these are suspicious looking cells. And then you're able to kind of provide that output for the physician to deliver the results. So that two parts of business is great because it doesn't, when you have this type of software platform, it could be used both for the research community, the university, academic centers, and then the pharmas, and also the lab setting. And these research universities, by the way, are, as you know, sponsored by the pharmas to come up with new drugs.
Yeah. So Lisa, is this a seed investment for you?
This was actually, we participated when I was still in Robo Global, investing through the private funds there. We invested Series A round, and now they just completed Series C.
Okay. It's the reason I asked you about the seed question is that these kinds of companies that are playing in the drug discovery ecosystem or in the health ecosystem in general, their early stage journey tends to be quite complicated. So I love to hear about how they have navigated the early stage journeys to get to a point where investors are willing to write checks, because this is a very cumbersome go-to-market strategy that they have to navigate.
Yes, and I think one thing I learned from them is because we were actually investing a little bit more A and B, and now we're going a little bit earlier. What I learned from them is the fact that you need to spend time really talking to that early stage pre-seed seed investors. Otherwise, you're going to really waste a lot of time talking to the later stage investors that kind of pretend to be early stage, but they're not.
Yeah, that we have covered in 1Mby1M. We focus very heavily on investor entrepreneur fit, and we are very careful about whom we send entrepreneurs to, just not to waste a lot of time.
Yeah, and sometimes you get the connection and you talk to them and maybe they're ready. We have seen, by the way, situations where a later stage investor say, I'm really ready for early stage. We make the connection and they really take that leap. But you could usually tell as a founder the kind of question that they're asking you. They're going to say, why is your revenue only 4 million? And you're like, wow.
We're very much aware of that. So, Lisa, what are you seeing in your deal flow? So you are obviously soliciting AI ventures, robotics ventures, vertical AI ventures, and maybe some other things as well. What trends are you picking up from the deal flow?
We're seeing a lot of generative AI companies right now. Obviously, you read a lot about agentic platforms, but you don't see a ton that's at least really
ready. Agentic is a little bit early still, I think.
I think so. And I think the more you kind of read and learn about, and if you have any time to look through the data center builders, right? AI platform companies, what they're building, you could still see that we're in that early stages building the infrastructure that's really required to really run a really nice Gen AI type of applications. So because of that, I think we're still in the infrastructure build mode in AI companies. So we are meeting a lot of semiconductor companies, edge devices. There's some amazing companies right now, very high quality, really impressed with it.
Is that something you do invest in, semiconductor?
Yes, we do. And we're actually
that's a very specialized area.
It is. And we're looking for, our thesis is really investment thesis to look for builders and developers of AI, but not necessarily the companies are building data infrastructure like the data centers. We don't have the kind of capital to provide that. And we're not unhappy that we have a bunch of VCs that are willing to pay hundreds of millions to help support that infrastructure build. We're looking for more of a AI tool companies, or I'm seeing a lot of great multimodal software companies. That's really
software is doable in a leaner fashion. Semiconductor is a fat startup, effectively. If you distinguish between lean startups and fat startups, semiconductors tend to be fat startups, and those are hard to manage.
Right.
And unless you have very specialized expertise.
Yes, we agree. And we're looking at some AI application companies, but we're a little bit pickier with the AI application because we have to understand what is their defensibility, right? Is it just you're just automating the workflow and you're saving operational expenses? But we really want AI the kind of AI companies we're looking for are the ones that's going to do beyond just helping reduce costs in the OpEx, but also help customers monetize some revenue, market share, revenue capture, in really improving their productivity. I think those kind of companies are going to be valued higher than the ones that are just saying, hey, we could help you automate this intelligently using AI. We already gone through that, right, phase. So you're going to see that enterprises now, customers want solutions that could do beyond just cost savings and efficiencies. You need to help them generate revenues. Everyone's going through revenue growth issues right now. They want to take market share. They want to expand to new areas of growth. They have a real strong idea of what they're looking for. They just don't know where they are. The customers don't know where we are in the AI stage. Do we invest now? Do we invest later? Do we continue to assess what we're trying to achieve? So you're seeing a lot of these discussions, and I think it's important to make sure you're not just part of a project of an AI, but you have to be part of the workflow.
So one of the things I'm seeing both from investors and entrepreneurs is there's a lot of services that are going on inside of these AI product companies, that it's kind of like products and services. And a lot of the agentic AI work is happening in those kinds of companies where there is lots of domain knowledge, lots of customer relationships, and lots of automation to accomplish. And that is done in a services mode often, and then productized as people go along. So I'm seeing multi-million-dollar contracts being written to vendors within the vertical AI space that are actually cost-saving contracts, but it is heavy-duty automation, heavy-duty automation. So anyway, that gives me a very good idea, and we can start working together, and we'll send you entrepreneurs as we go along. Nice to meet you.
Yeah, thank you.
Is there anything else that you want to add to our listeners before we switch to the entrepreneur pitches? I know you have to run, but we're going to switch to entrepreneur pitches soon.
I think the only thing is that power of networking. I think a lot of times founders believe that, hey, if I just keep my heads down and build my product and then get a couple customers, my numbers will really impress people. But I always tell founders that if you go network and meet people, because you don't know who could be your partner, your investor. A lot of times, a lot of my portfolio companies, I didn't meet them because one of my VC friends called and said, hey, can you look at this company? I met them naturally at conferences, at events. And we took out some side, times together to learn about what they're working on, what they're building. Those are companies I get really excited, and a lot of VCs as well. We all like to think like we've discovered this on our own, So networking is really important. And if you can't do it yourself because you're shy and introvert, and that's okay, then hire someone, a co-founder who can do that. Because I think that's a very important part of the story right now, is to go out there and try to meet as many investors and partners that you can, and then just keep an eye on them. Even if they're later stage, you never know if they leave and start their own fund. So maintain that relationship, whether it's a newsletter, whether you have events or attending conferences, you have to show that you're around and that you're relevant and that you're building something amazing.
All right. Thank you, Lisa. Good to meet you, and we'll be in touch.
Thank you. Thanks for having me. Bye.
Bye-bye.